Okay, today I'm out and about again, and I've had an email come in from a fellow trader, Paul, and he wants me to talk about stock tips or any tips, forex or whatever sort of tip, and he wants to know what I think, and I want to share with you the one major problem with the majority of stock tips. So I think we might have all done it when we're beginners. We just want to know what's the hot thing to buy or short sell. And the problem with tips is, if you're lucky, you might get 2 bits of information. Obviously, you're going to get what stock to buy, and you're probably going to get at roughly what sort of time to buy. So let's say you look at today's newspaper tips. It might say buy Apple today. So there you go, 2 bits of information. Now, that's not even half the information you need to be a profitable trader, because no money is made or lost in any trade until you exit the trade. So what they're telling you is, might tell you when to buy and what to buy, but they're not telling you when to get out. Now, this can have drastically different results. For example, let's say trader A and trader B both take that tip in Apple and they buy. So they buy on the day, and throughout the day Apple might go up 5%, and the following day trader A wants to take that profit, so he does. He sells and he takes the 5% profit. Great, he's had a profitable trade, good tip, so he thinks. Trader B is in it more for the long term, and he's thinking about holding for a couple of months. But within the next week or so, Apple, the price starts to slide, and it might go down 10%, and it never recovers back to where it was tipped. It never goes back. So trader B was in a losing trade from a week or so in, and eventually gets fed up and sells out for a loss. And he'll argue it was a bad tip. It was no good. It's exactly the same tip, both bought on the same day, had 2 different exits, 2 different outcomes. One was profitable, one was a loser. So that's the major importance of not taking tips. They don't tell you the whole picture. They don't tell you the whole story. They don't tell you when to exit. So my advice is, you're far better off develop your own strategy, whether it's technical or fundamental based, but it's yours. Know your entries, and more importantly, know your exits and your money management. So there is another scenario. Let's say trader A was doing really well, and he was buying on the day that they were tipped, and he was selling a day or so after and taking a little bit of profit on each trade. He might have made half a dozen trades, and he was doing all right, and he thought, yeah, this is working. I can put some more money into this. This is a good way to turn money. Well, let me tell you, it's not going to be sustainable, because it's not his strategy. He's working off the back of someone else. What happens if the analyst who's tipping, whether it's the newspaper or whoever it is, the guy who's tipping, what happens if he leaves the newspaper or stops tipping? Suddenly trader A's business is out the window. So again, just another example. Make your own strategies, do your own research, and that's yours, can't be taken away from you. Okay, so keep the questions coming in, and head over to my blog at thetransparenttrader.com, and I'll see you on the next one.